We are live.
All right. Good morning, everyone. I'd like to call the meeting to order. I acknowledge that we're in Treaty 1 territory, the home and traditional lands of the Anishinaabe, Ojibwe, Innu, Cree, and Dakota peoples, and the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation and Treaty 3 territory. My name is Neil Harden. I'm chairing today's panel. With me are Diane Knight and Cindy Stevens. The assessor today is Nathan Kupfer, and the administrative personnel is Sally Caulfield. To the Zoom participants of the hearing, please note you are placed in the waiting room until your property is called upon. When it is your turn, you will be admitted into the meeting. Kindly follow along in the City of Winnipeg's Board of Revision YouTube channel for the hearing process. Once a host admits you into the hearing, please close or mute your YouTube player. You will then be permitted to speak with respect to your property. Once your hearing has concluded, you can leave the meeting. We will be hearing applications for revision of assessment roll in accordance with your Municipal Assessment Act. The matters for which revision is requested have been described in each application and will limit discussion to those matters. The statements that are made at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be advised that comparisons of assessments of properties are not considered evidence of market value by the board. The board is appointed annually by council and is independent of it in the city administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order to be mailed to all parties as soon as possible. Please note that the board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of King's Bench if the matter pertains to the application of exemptions from taxation. Should you wish to appeal, information on how to do so will be included with the board's order. With respect to the hearing process, I will confirm the points of appeal with your property to be addressed with each applicant following the swearing in. We will then have the assessor's testimony followed by questions the applicant may have, then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they wish. Once all the evidence about an application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the board will deliberate in private and make its decisions. You will receive the board's decision by registered mail as soon as possible. As information, all public hearings are live streamed, recorded, and will be part of the public record. We will be hearing items 1 through 3 on our docket today. Uh, Ms. Caulfield, has the applicant for item 1 shown up online yet?
Not yet, Mr. Chair.
All right, then we will proceed with item 2, which is file number 25547. So can you do this swearing in, Ms. Caulfield?
Mr. Assessor, please state your full name.
Nathan Kupfer.
Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Mr. Applicant, please state your full name.
Gary Rofreimer.
Do you affirm that the evidence you're about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Mr. Chair, I'm going to put Mr. Mercury into the waiting room now.
Okay.
Thank you.
All right, so Mr. Kupfer, on item number 2, file number 25547, you can begin.
Thank you, Mr. Chairman. Just a quick note, Mr. Reimer and I were able to discuss these properties yesterday, and we did come to agreements. So I'll read the file onto, read the roll number and the file number onto the record here and provide my recommendation. And if you have any questions, of course, feel free to ask them. So this is file number 25-547. The roll number is 0309-161-5500. And the owner is Ladco Company Limited. And for this property, I'm going to make a recommendation here for the 2024 roll to reduce the value to $16 a foot, which equates to $12,292,000. Thank you.
$12,292,000?
Yes, sir.
All right, and Mr. Reimer, how do you feel about that?
We are in
Value?
agreement with 12,292,000 and ask the board to order accordingly. Thank you.
Okay. Are there any questions from the panel on this? Ms. Knight,
No, sir.
Ms. Stevens?
No questions, thank you.
Okay, I note that classification was also appealed.
Classification, we'd ask for that to be confirmed.
Okay.
Yeah.
All right. So then we will go on to file number 25548. Very sequential. Mr. Kupfer?
Yes, sir. File number 25548 has the same roll number 030916155500, and of course the same owner, Ladco Company Limited. And for the 2025 assessment, we came to an agreement at $19.25 a foot, which equates to $14,789,000. 14,789.
Okay, and Mr. Reimer, how do you feel about that?
We're in agreement with 14,789,000, and we would also ask that the classification please be confirmed at this time. Thank you.
Okay. Any questions from the panel on this?
No, sir.
And no questions, thanks.
All right, so thank you very much. Short and sweet on this one.
Thank you very much all for your time.
Okay, and Merry Christmas, Mr.
Merry
Reimer.
Christmas.
Yeah, Merry
And
Christmas, Carrie.
and to you guys, thanks very much. Bye-bye.
Okay, is there any sign of our appellant from item number 1?
Not at this time, sir.
Okay, let's recess until 9:15.
All right.
And then at that point, we shall deal with the property one way or the other.
Do we have to let the other guy know that we're recessing?
I'll let him back in as soon as we're offline.
Okay.
We are live.
All right. Thank you. And the next item we'll deal with is 30 Stapleton Street. Can you swear in the applicants, Ms. Caulfield?
Mr. Neufeld, please state your full name.
Rocky Neufeld?
Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Mr. Mercury, please state your full name.
James Mercury?
Do you affirm that the evidence you are about to give at this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Okay, before we begin on this, just a reminder that these hearings begin at 9 o'clock. So I would appreciate all parties being present at 9 o'clock.
We've lost Mr. Newfield.
I know, I've lost my video.
Oh, okay.
All right, so Mr. Kupfer on 30 Stapleton.
Thank you, Mr. Chairman. This is file 25-546. The roll number is 140-938-15100, and the street address, as you said, 30 Stapleton Street. The owner is Pinnacle Auto Body East Holding Corporation, and the tenant is Focus Auto Body and Glass. So it's a commercial vehicle service related property, constructed in 1974. It's all on one story. The land area is a little over 33,000 square feet. The plan area is 6,000 square feet, meaning that there's a land to building ratio of about 5.6, or roughly 5.5 times more land than there is building. We have a 2026 assessed value of $991,000 that I'm going to recommend be confirmed today. Moving to page 2 of my brief, you'll see 2 sales on record here, one of them being post-reference, so that information has been struck. And then the one previous to that was all the way back in 2002. Beyond that, I provided some photographs of the property. First, an overhead view. You can see it just off of Nairn here, Stapleton Street. And then further down, you can get a bit more of a close-up of the property, as well as a Google Street View showing that front door and the signage for Focus Auto Body and Glass. Moving to page 4 of my brief, you'll see I've selected 10 comparables. These are all vehicle service related comparables. They are spread out pretty well throughout the city here. Just a few notes on these. None of these are what we would call franchise or chain vehicle service garages. There's no Fountain Tire or anything like that here. These are all more or less standalone service providers. So we're trying to match that as we find that the chains tend to pay more per square foot. So this is a better sample size for comparison. In terms of the comparables, in terms of proximity to the subject, comparable number 1, I believe, would be the closest on Stadcona. It's not right next door or anything. It's about 3 kilometers away down there. But that would be the closest, followed by, I believe, 721 Watt Street would be the next closest. And then beyond that, you're looking at properties that are, 8 kilometers or more away. I guess the next closest would probably be on Henderson. In terms of the property itself and the shop itself, I would say probably comparable number 7 on Clarence Avenue is the closest. Similar age of construction, similar size of the shop, and I believe it also has a similar land to building ratio, quite a bit of extra parking area to store cars, that sort of thing. Moving to page 5 of my brief, quick correction here. The rent per square foot being shown next to the leasable area at the top is not correct. You'll notice there's two different potential rents here that are being calculated. So this rent at the top should read $12.12 by 6,000 square feet is how you derive the potential rent of $72,720, and then down from there, the rest of the formula should be correct. All of these are model generated parameters here, including the expenses, the shortfall, and the vacancy, as well as the capitalization rate being applied of 6.9%, is how you derive that final value of $991,000. Page 6 of my brief has the income value summary. Again, everything here is on one stream, so it's all pretty straightforward, just those same values again. Page 7 of my brief is our capitalization rate table. Again, this isn't particularly specific to this property. It's just a general insert we have for our briefs here. We'll note that there is no vehicle service garage category that's reported by these agencies, so we don't have a direct comparison for the capitalization rate. Generally speaking, these types of properties tend to be somewhat industrial, with generally with a retail component and some sort of office component. So, in my opinion, it's a bit of a blend of those three. Again, we're applying 6.9 from our model. Page 8 of my brief is the Municipal Assessment Act excerpts. Nothing really of note here. Again, just kind of a standard insert for our briefs. And then beginning on page 9 is the income and expense questionnaire returned by the property manager, I believe it's listed as. So there's a bit of conflicting information here, but I'll cover it anyways. So on page 9, you'll see that they have gross rent ticked off here. They list the building size, that's correct. The land size, that's correct. That's all good. Page 10, they then indicate that it's a net lease, no step up, not owner occupied, and then list a $10 per foot rental rate. That's the 5,400 times 12 divided by the leasable area would give you $10 a foot. Page 11 and 12 is just the remainder of that mailer. Nothing really of note there from me. Yeah, beyond that, I don't think I have anything to touch on here. So again, I'd ask that the 2026 assessment be confirmed, $991,000. Thank you.
Okay, questions, Mr. Neufeld.
If I could begin, Mr. Chair, I have some questions to start. Mr. Neufeld, I expect will follow.
Okay, go ahead.
The reason for my attendance, Mr. Chair, is there are some concerns with respect to the validity of the issuance of this assessment, which the board needs to take into account. And I'll have some questions on that. So I'm not going to be dealing with the question of value, but the assessment itself.
Okay.
So Mr. Kupfer, you can confirm this assessment, the most current assessment is a supplemental assessment?
Yes, sir.
Okay, and that was an assessor advice that was issued, I believe, September, it looks like it was September 24th. Do you have a copy of the assessor advice?
Yes, sir, I do.
Okay. And my understanding is that the assessor advice or supplemental assessment was issued not because of any physical changes to the property, but simply a new opinion of value was put forward by the assessment department. Is that correct?
No, sir, that's not correct.
Okay. My understanding was that there was a recent sale of the property which triggered an assessment review. Is that correct?
That is correct.
Okay. So that recent sale then led to a new opinion of value of the subject property. Is that correct?
No, sir, that's not correct.
Okay. Well, then walk me through what your understanding is of the circumstances that led to the supplemental assessment.
My understanding, and in looking at the supplemental assessment here, is that it was issued under Section 14.2 of the Act, and that's included in the supplemental assessment notice as well. It simply reads, "The city assessor may at any time, for the purpose of correcting an error or omission, amend the latest revised real or personal property assessment roll or business assessment roll, as the case requires, of the City of Winnipeg as certified, amended, and revised by the city assessor." So my understanding was what happened here is that there was an error or omission that was discovered in the review of the property, and that's what caused a reclassification of this property from being a warehouse property to a vehicle service related property.
Okay, so when you say a reclassification, the actual classification for taxation purposes did not change, correct?
Correct, it's still 60.
Okay. 60. And if you go above the box, so it was originally $678,000 and you've now increased it to $991,000. And you can see the reason for the assessed value change just above that box, which says assessment value change, correct?
That's correct.
And you reference section 14 sub 2 of the Act. What specific error or omission are you referring to?
The property was being assessed as a storage warehouse. And after reviewing the property and after reviewing the records, it appears that it isn't a storage warehouse now, and it wasn't a storage warehouse before the sale or any time recently. So that was considered an error or omission, and the supplemental assessment notice was issued.
So your view is that under this section of the Act, that at any time within the 2-year cycle, the assessor determines that his valuation method was incorrect or based on an improper methodology, they have the authority to change the assessment at any time?
Yes, sir.
All right. Are you aware of the what triggered this review?
I believe the sale is what triggered the review. An exterior inspection was performed, and some information was reviewed, including permits for the site as well as the website for the property.
Okay. Thank you, Mr. Kupfer. Those are my questions. Mr. Chair, I'll have some submissions following Mr. Neufeld's questions on the valuation issue, but those are my questions for now. Thank you.
Okay, Ms. Neufeld then.
Yeah, just a bit of a follow-up to Mr. Mercury's questions on this. How many times in the past 20 years has the assessment department been out to this site and reviewed it? Do you know?
To my knowledge, just the one when, like I said recently, when it was reclassified.
You didn't have a chance to review the evidence we submitted on the previous 20 years of appeal history?
I didn't see 20 years worth of appeal history being submitted as evidence, no.
Okay, so you didn't see it. My question is, so you're not aware that an assessor has been to this site virtually every 2 years since 2005?
No, I'm not aware of that.
Okay, and so, but today there was a change, or this cycle there was a change, but not based on the previous 20-year history. there's been no consideration for it.
No, I haven't seen any evidence that an assessor has visited this property every 2 years for the last 20 years.
And in your assessment records, do you not have any information regarding condition reports supplied by any of the assessors who've been out?
No, I don't.
And as Mr. Mercury had asked you, there, to your knowledge, have there been any condition changes, physical condition changes on the site?
I would have to look through the permit history again to see when the last change was. I don't believe there's been anything recent.
And have you been out to the site?
I haven't, no.
On the income and expense form, what was the name of the person who filled that out? Did you inspect it at all or follow up with any investigation?
No, I haven't contacted. John Carey is the listed manager who filled out the income and expense questionnaire.
Oh, okay, and do you know what John Carey's relationship was to the operation, the business operation?
Only that he's listed as the manager.
So the department did no investigation of that he sold his business and his real estate within a short period of time, including the Focus Hyundai at 1066 Nairn, that it was a package deal, same vendors, same purchasers, same tenants who were renting it on an interim basis?
I'm not aware of what sale you're talking about now.
You're not aware, you did not look into it. Now, if you run into a situation where a vendor is leasing property to a purchaser and there are multiple parcels involved, is that something that you would deem to be valid?
The only sale I can see on record here, sir, is post-reference.
That's not my
so
question.
No, I haven't investigated it, and no, I won't be speaking to it.
Does the assessment department commonly use transactions between related parties who are also selling their business as valid indicators of value?
No, not to my knowledge.
You had mentioned the workup on the rental workup that showed a different value than the final value. Did you amend your workup to notify the appellant that you had an error?
No, I didn't amend the workup or notify the appellant.
So 5 minutes ago was the first time that you admitted to anyone that there was a mistake, that there's a different number at the top?
Yes,
Is
sir.
that correct?
Yeah.
And had you reviewed the previous communications? Never mind that. Sorry, I was thinking of something else. You brought up a rent on Clarence Avenue. Did you see the notes on Clarence Avenue from a previous appeal rebuttal information that it was a partial lease with the owner using part of the property?
No, sir. Not unless it's been submitted as evidence.
Okay, well, it was. I submitted it, so I just asked you if you had seen that. The answer is you did not review any other information then, correct?
So are you saying you submitted it for a different hearing, or you submitted it for this hearing?
It has been submitted to the public domain as evidence at other hearings, so the assessment department has it.
No, I didn't review other properties' evidence in preparation for this hearing.
Have you inspected any of the comparables?
No, sir, I don't believe I have.
Okay, those are my questions on this matter.
All right, Ms. Knight, any questions?
Just how did we get the square footage price wrong on the form?
You know, I did my best to try and figure that out. I wasn't able to get a strong answer. I know that there were moving parts here with this property being changed over. from a warehouse to a vehicle service property. My best guess is that something didn't get refreshed or didn't get changed properly in the system. However, as I've noted here, the rest of the formula here is correct. The potential rent all the way down to the value, for whatever reason, just this one stated rent per square foot at the top came out as incorrect.
Yeah, okay. All right, thank you.
Okay, Ms. Stevens.
Mr. Kupfer, can you help me sort of understand where the differences? I mean, I generally do, but this is quite a difference in the assessed value. So the differences that you would be, the assessment department would be taking into consideration between a warehouse and a vehicle property.
Well, the short and sweet answer is we follow the rents that are submitted, and vehicle service garages tend to rent for more than warehouses do. And as such, our model is going to follow that. And in this case, I believe it has to an appropriate rental amount in that $12 range.
So the main difference was the rent, is what you're saying?
Well, of course, there are differences to the property that cause the rents to be different. But yeah, the short answer there is that they tend to rent for more. So our model tends to put them at a higher value.
Okay, that's it. Thank you very much.
Sorry, I just have one more.
Okay, go ahead.
Now I have to think of what it was. Shoot. I just had it in my head and now it's gone. Okay, never mind. Sorry.
All right. Okay. Just, I guess, to clarify then, the property owners are listed as Leslie and Karen Carey. Do you know if the manager is any relation to those other than the same name?
I would assume yes. I didn't call them and reach out to clarify the relationship there.
Okay, but the leaser is the tenant is an arm's length tenant. Is that correct?
It's indicated as being not owner occupied on the income and expense questionnaire that was submitted by Mr. Carey. I didn't do a deeper dive to question that.
Okay. All right.
I do remember my question now, sorry.
Okay, go ahead.
So you're saying that this was listed as a storage warehouse, correct?
Correct.
And how long was it a storage warehouse on our properties?
From what I can see, at least 20 years.
How long has this Focus Auto Body been in that location?
A long time.
So the only reason this is coming up is because there was a sale on this property?
Well, sales permits are generally the main way that we follow up on property. We don't have the staff to inspect every property every 2 years, unfortunately. So it's generally changes to the property or sales of a property that'll trigger a review or an inspection. So in this case, we saw the sale value. We thought something's not lining up here. And one of our field assistants did a review of the property, and we believe now it's being classified and assessed properly.
Okay, so Focus Auto Body's been there this whole time? It
Yes.
hasn't changed names in that 20-year time? It's always been there?
Not that I've seen. I think it's been there.
Okay.
I'm not sure about the entire 20-year time, but
And
quite a
so
long time.
when Focus Auto Body bought it, there was no look at this property then to put it into from a warehouse property to a service garage or whatever property we're looking at.
I don't believe there was an inspection for the 2002 sale, which would have been the last transaction. Yeah.
Okay, thank you.
I just had a clarification there, just based on the answers. Just Focus Auto Body is leasing it from Pinnacle, right?
That's what's been reported.
Correct. Okay, so Focus doesn't own the property. They've
Correct.
been leasing it.
Yes.
Yeah.
Correct.
Okay. I just wanted to confirm that I understood that. Thanks. Okay.
Yeah.
All right. So Mr. Neufeld, you can begin your presentation.
Sorry, I had a couple of redirects. Firstly, on the last question asked was the assessor. I'm sorry. Did I hear you correctly say that Focus is leasing it from Pinnacle? Is that your belief?
That's what's stated in the income and expense questionnaire.
Focus leasing from Pinnacle. So who is Pinnacle?
Pinnacle is listed as the leasee.
Who are they? Do you know?
Pinnacle Auto Body? They're an auto
Yeah.
body group, yeah.
But the principles behind it, the organization, you know nothing about it?
Nope.
Because you said something that's incorrect, okay? You said Focus is leasing from Pinnacle. And where did you get that assumption from?
Pinnacle Auto Body is listed on the income and expense questionnaire as the tenant here. The owners are given as Leslie and Karen Carey. And the tenant, at least according to the signage and everything else here, appears to be Focus Auto Body and Glass. That's what I know about that.
What date where is this income and expense form?
The date is given on the form, sir.
What date is that? The lease date?
June, the lease date or the date of
Yes.
the form?
The lease date?
The lease date is given with a start date of August 1st, 22.
And the end date?
July 31st, 23.
And the sale date that you did not enter as evidence, can you just give us the date?
August 1st, 2024.
Okay. So your assumption is based on old information and you have not reviewed or looked into it. Is that correct?
My information is based on the submitted income and expense questionnaire for the appropriate time period.
Okay, well, I'm just going to lead you on a bit here because this is redirect, but Focus Auto Body is John Carey. Pinnacle is a group of people led by Brian Lowe's and Doug Danilchuk. So, and they purchased the site. So I just don't understand what you're saying about these, the assumption that you've got that a former tenant who bought the site is now leasing back to the former owner. Is that what you're saying?
No, that's not what I'm saying.
Okay, because you say the name of the tenant on the form is Focus. So you're
No.
saying Focus is still operating it.
No, the name on the form is Pinnacle Auto Body. It's page 10 of my evidence, Mr. Neufeld.
Okay,
And it's
but you
submitted
said
by the manager as well. So this isn't my information.
that Pinnacle is leasing to Focus, correct?
I apologize if I misspoke, but I've clarified multiple times now.
Okay. Back to the other redirect, you had said something, and I don't have the luxury of looking at it, but you said there's a size discrepancy. Is that what I heard on the
No.
form versus your records?
No, you didn't hear correctly.
You said that you were reviewing something on the reason there was this change, and it had to do with a change in the use from warehouse to an auto body. Were you referring, what was that you were referring to as a change? I thought I heard you say the size or something.
No, there is no change to the size.
Okay, sorry, that was my poor connection. This mention you made that you were reviewing something and you talked about a change, you weren't able to ascertain what particular change then were you referring to that you were reviewing and you couldn't ascertain what it was, and it happened during the change from warehouse to auto body?
I have no idea what you're asking me right now, Mr. Neufeld.
Well, I suppose we could all review the recording. Mention that you said you had not done a deep dive. It was a response to the first question you were given. And I was just trying to figure out what was the scope of this review. What did it involve? Because I had asked you earlier the same question, I thought, and you came up with a different answer.
I'm still not clear on what you're referring to.
All right, okay, those are the end of my questions, and I do need 3 or 4 minutes, if the board will forgive me.
Seems to me you had 15, but further question then arising, on your page 1, you indicate that the owner is Pinnacle Auto Body, and yet on the rental roll, they're listed as the tenant. Is that not um, uh, are that seemed to me it's owner operated then? Is that correct?
It could be, yes, sir. Like I said, there are some discrepancies with the income and expense questionnaire, including checking off both gross on one page and then net on the other page. So it wasn't really clear to me what the ownership structure was there, or the agreement. Again, this works out to $10 a foot, so we're not basing our assessment on that necessarily.
Okay. All right. Thank you. So it is Mr. Neufeld, your turn to present.
Sorry, Mr. Chairman. I received 2 different briefs here from Mr. Neufeld, one marked late and one not marked late. Can you clarify which we'll be speaking to today?
We haven't received any that was classified as late.
Okay.
Number 7,
Number
part 7,
Part 7?
yes.
Okay.
Nothing was late. This is an adjourned hearing we submitted on the first hearing, and then when it was changed, we resubmitted for the second hearing. So I don't control distribution of the evidence.
The
Yeah,
item to which I'm referring, Mr. Neufeld, was submitted by the other agent in your office, and I wasn't sure if you intended to present that as well.
Oh, okay. There's a fair amount of information. But we're using all of it.
You submitted 6 items, and then on the 27th of November, and then an additional one was sent by the other Mr. Neufeld on the 28th.
That's correct. Those are all intentional.
Okay.
so what was the deadline for submission, Ms. Caulfield?
It was the 27th.
27th. So the second one would be late evidence. I'm not sure what the difference is. They have the same valuation.
Oh, there was typos that were corrected, and nothing's nothing related to the actual valuation.
Okay, was there new information in contained in?
There was an updated rent roll, I believe.
There appears to be a different set of comparables as well on page 3.
That's what I said, yes.
On page 3, a different set of comparables. Okay.
Sorry, I am changing stations, so I need to be. I don't know if I need to be re-admitted.
Okay, so the second brief is after the deadline, so would constitute late evidence. Mr. Cupford, do you have any objection to receiving the late evidence?
I received it. Sorry, go ahead. I was just going to say I had time to review it, so I don't have an issue with accepting it, but I wanted to clarify which we would be speaking to, so we're all on the same page.
Okay. Ms. Knight, do you have any questions on the receipt of the late evidence?
Which is the late evidence?
What's that?
Which one is the late evidence?
The final
Part
one,
seven.
part 7.
Okay. Just a second. No, I'm fine.
Okay, Ms. Stevens, any questions on the late evidence?
I don't have any questions on it, no.
Okay, then,
Sorry, there's something in the background making
Yeah,
a weird noise.
I have two connections going. Can you,
I was going to say we will take a short recess to consider whether to accept the late evidence or not.
okay.
All right, thank you. Welcome back. The board has deliberated and we will accept the late evidence from Mr. Neufeld. So you can proceed, Mr. Neufeld.
Mr. Chair, if I may start, with your
Sure.
permission, I'm here on a very narrow issue and not to deal with the value, but I just alluded to it during my questions of Mr. Kupfer. But if I could just start, because this really is a preliminary issue that I'd like to address, and if you look at the assessor advice document, and if you heard from Mr. Kupfer, I have looked at this carefully, and in my submission, this clearly is not a lawful exercise of the city assessor's authority under the Municipal Assessment Act to issue a supplemental assessment. There has been no physical changes. There's been no classification change. There's no other changes that would typically result or give the authority to the assessor to issue a supplemental assessment. This was the reason for the supplemental was fairly clearly stated in an email that's included in Mr. Neufeld's brief and in a letter that I wrote to the Board of Revision with respect to this matter. You should have a copy of that. I think the document is titled Legal 2, if I'm not mistaken. If you have that document from Mr. Neufeld's presentation, you will see, and I'm not going to repeat verbatim my letter, but there is an email embedded within that letter from the assessment department, which indicated the reasons for the supplemental assessment, which was, as Mr. Kupfer noted, their review of a post-reference sale triggered a review of the value. They determined the value was too low, and they issued the supplemental assessment. Multiple problems with that. Number one, it's obviously a post-reference sale, can't be considered. Assessment department shouldn't be looking at that at all. But even if this were within the relevant period of time, that does not give the assessor license to issue a fresh opinion of value. There's new information that's discovered all of the time in terms of market evidence that's available. There was no restriction on the assessor coming to review this property prior to the assessment 2026 assessment rule being returned. There's no issue of non-compliance, nothing like that. I would remind the board that under Section 42 of the Municipal Assessment Act, the assessor has the right to appeal an assessment as well. They don't typically do that, but they do have the legislated right to appeal the annual assessment. That appeal deadline came and went, I believe, at the end of June. I'm not sure the exact date of the appeal period. There was no appeal by the assessment department. They could have appealed it. Instead, what they did is they issued a supplemental assessment in September of this year because of their fresh opinion of value. That's not authorized under the Act, Mr. Chairman, quite clearly, and I think this board needs to be very mindful of the type of precedent this would set going forward, because there would be no end to supplemental assessments. There would be no end to non-refundable filing fees that would have to be issued and submitted by taxpayers, and it's clearly improper. So regardless of the opinion of value, regardless of the evidence, this is not a proper supplemental assessment under any interpretation of the Municipal Assessment Act. It's not an error or omission within the meaning of those words under the Act. There's no physical changes or other changes that would warrant a supplemental assessment. And for that reason, the board should simply dismiss the assessor's position on a fresh opinion of value and just return the assessment to its original assessed value as noted. Those are my submissions, Mr. Chair. And to the extent that this really is a preliminary issue, and frankly, one I would suggest that the board could deliberate on at this time, or just simply wait for all of the evidence to go in. But this is not a valid assessment. Those are my submissions.
Okay, we'll deal with this issue now. Mr. Cupford, do you have any questions on Mr. Mercury's submission?
I suppose just a few clarifying ones. Mr. Mercury, you spoke to the reference date and this 2024 $1.1 million post-reference sale. Is it section 14.2?
Mr. Cupford, you just submitted into evidence things that weren't, we cannot consider the value of the sale.
Correct, sir. Yes. I'm speaking to the sale here.
We don't want to hear the valuation. So
Okay.
go
sure.
ahead with your question.
Oh, my question is simply, are you aware section 14.2 of the Act states the city assessor may at any time, for the purpose of correcting an error or omission, amend the latest revised real or personal property assessment rule?
I'm aware of what the legislation states, but a revised opinion of value is not an error or omission.
Okay. And you're aware then after my presentation that we had this property assessed as a warehouse property, correct?
I'm not aware of how you assess the property. That's up to the assessment department. You came up with a value. There's no indication on the assessment notice as to whether it's valued as a warehouse, as a dealership, or anything else. All we receive is a value, and if the value is too high or too low, the parties have their remedies.
Okay. Did you contact the department or attempt to contact the department to receive an explanation for the change?
Mr. Neufeld did and asked why are you issuing a supplemental, and the response he received is included in the letter that I provided. So they reviewed a post-reference sale, and that triggered a review of the valuation.
Okay, thank you. Those are my questions.
Okay, Ms. Stevens, questions?
I guess can you point to anywhere, I know you mentioned several areas of the Act, but anywhere in the Act that would specifically negate this practice?
There's nothing in the Act in terms of what it states. I think you have to read section 14 in conjunction with section 13 of the Act, and section 13, I'm not sure if it's in the material itself, but I suspect the board is probably well familiar with it.
Sorry, I'll just interrupt for 1 second. In the evidence marked evidence 2, evidence 3, there are the issues that Mr. Mercury is speaking to, which is reference to the Act and the past history.
Yeah.
Mr. Chair, may I interject for a moment, please?
Sure, go ahead.
I don't think that the agents are aware that we do not retain the original submitted file names when we
Okay.
process the evidence. So for ease of use, if I may say, number 1 is evidence 1
Okay.
in your files. Number 2 is evidence 2. Number 3 is evidence 3. Number 4 is legal 1. Number 5 is legal 2. And number 6 is legal 3.
Thanks.
Does that clarify?
Yeah, so 2, 3, 4, and 5 contain the information that Mr. Mercury was referring to that we have submitted to the board for the purpose of this hearing, which have the legislation, condition pictures, and the past history, as well as communications with the assessment department.
Okay. So, Ms. Stevens, your own questions.
Sorry, so my question was, somewhere in the act that would clearly point to that, and I think what I'm hearing is, I understand what you were saying, so.
Yeah, I think the short answer to that question is that the meaning of error or omission clearly is not a subjective error or omission. It's a matter of objective evidence that comes before the assessor's attention. So it's under section 13, the words error or omission are also used. So if, for example, the most common example would be if real property is simply missed by the assessor. So for example, there was a storage shed or an addition that was put onto the building and they just didn't catch it during the reassessment period. They would have the right under section 14 if they're going forward, and also have the right under the City of Winnipeg Charter to go back or to reassess the property for the current year and up to 1 year back, in fact, January 1st of the prior year. Other examples would be if there's a change in liability status we typically see. So if an exempt entity takes ownership of the property or starts using the property for a specific exempt purpose, that would also potentially trigger a section 14.2 assessor advice or a change under the City of Winnipeg Charter. Fire is destroyed by fire, for example, that would also potentially trigger an assessor advice. But simply the changing of opinion of value based on an individual assessor's review of the situation does clearly not contemplated as an error or omission. And I would ask the board to carefully consider the ramifications of that, because there are many assessors within the department who may have a different view as to the proper classification, or I use the word classification loosely because it's not, there's no formal classification of this building, but in terms of how it should be valued, whether it should be valued on a direct comparison approach, an income approach, if the cap rates that were being applied to the property were correct or not. There's no end to the arguments an assessor could make to say that I erred in applying this cap rate. I erred in using rental rates from non-comparable properties. That's not the intent of section 14 in my respectful submission. It is for objective errors or omissions that for whatever reason the assessor may have missed. So I'm not sure if, hopefully that answers your question.
It does, thank you.
Okay, Ms. Knight.
So on the page where it's the City of Winnipeg Assessment and Taxation Department, the assessment is there. Then it says city assessor may amend roles according to 14.2 and 14.3, and you're saying those are incorrect?
They may under 14.2 under certain circumstances for errors or omissions, but what I am saying is this is not an error or omission within the meaning of the act. An error or sorry?
So the error was that it was issued as a storage warehouse property, but it should have been a garage, right?
Well, that's what Mr. Kumpfer stated, but that I would strongly suggest is not an error or omission within the meaning of the act. Another assessor may indicate that the highest and best use of this value of this property is something different. That's a subjective opinion as to how this property should be valued. That is not an error or omission.
But isn't that based on what is on the property? So
It's what
on that
the
property, that building, the Focus Auto Body and Glass, who was leasing it from Pinnacle, isn't the taxation based on what's in that building at that time?
The valuation of the property is based on the assessor's determination of the fair market value of the property. The actual use of the property does not necessarily determine value. It may be used for something that is less than the highest and best use of the property. The value is to be determined on the basis of its highest and best use. So it is not a value and use analysis. And the property, keep in mind, the assessor has very broad powers to request information. They have very broad powers to inspect property at virtually any time they wish within 3 weeks notice. So you have to keep that in mind. This is not something that's been hidden from the assessor. Mr. Neufeld will speak to how many times this property has been reviewed. And I think you have to look at this from the taxpayer's perspective, because if this is where we are going and that you can form new opinions of value, you could literally have multiple hearings within the same subject cycle because somebody has changed their opinion. And we're talking about whether it's a warehouse or a dealership. What if the next assessor says that, you know what, I've unearthed 20 new comparable leases or sales that I missed. That was my error. I would like a fresh go at this, and away we go. New hearing, new filing fee, new resources to be expended by the Board of Revision.
So you're saying on this property tax bill that the 14.2 and the 14.3 are not proper notifications as to why this is being done?
That's what it says on the document. What I'm saying is that that's an unlawful reason to issue an assessment notice under 14.2.
Okay.
You know, and this valuation is relatively, I'll say relatively modest in terms of some of them that come before the Board of Revision. But I'd also ask you to consider, imagine if this property were appealed in 2025, and imagine it was further appealed to the municipal board, subject to appeal management, case management, and so forth. And then the assessor says, a year later, I have a different opinion of value. I'm going to issue a supplemental which have the legal effect of wiping out that entire process because they've changed their opinion. That's not how the Act works. And if this is where we are going, I would suggest that the board should be very concerned. Taxpayers will be concerned, and I would say the assessment department as a whole should think carefully about, is this really where we want to go?
Okay, so my other question then is, this assessment at 678, was that because yours is coming in at 451. So was the 678 appealed at that time?
My understanding, it was not appealed. So my position is that
sorry, no, just correct you here.
Yes.
We missed the 25 appeal because of the change in ownership. We appealed 26. That was on the docket for earlier this year, and then we had been notified that a supplemental was coming. So the supplemental was then reissued in, I believe it was November sometime, or late October, and we just adjourned the first one in favor of this one.
Okay, so thank you for that clarification, Mr. Neufeld. So that really kind of complicates the matter. What I can say, we have had this happen once or twice before, most notably on with respect to a property at 330 St. Mary. And in that instance, what happened was there was a liability change for a portion of the property, which the city accepted. They made the liability change, but when they did it, they actually increased the value of the assessment. Improperly in our view. We wrote to the city, and they did the correct thing, and they actually issued a new supplemental, putting it back to the original assessed value, but with the classification change, because they acknowledged there was no physical changes to the property. It was just a matter of dealing with the exemption portion. Here, that hasn't happened, and I think what really should have happened here is city acknowledges its error, issue a supplemental back to the original value, and we can deal with the value on its merits. Taxpayers should be entitled to deal with the actual value in 2026. Mr. Neufeld filed a valid appeal. Unfortunately, given this administrative step taken by the city assessment department, we now find ourselves in this predicament. But the taxpayer should be entitled to deal with actual value. The way my suggestion for the board dealing with this is that there should be a cap on the assessment, and that should be the original assessed value, because that's how it, there was no notice of request for increase, there was no assessor appeal. It's the original assessed value should be reviewed Mr. Neufeld's evidence on value should be considered, and Mr. Kupfer, of course, will have an opportunity to question him on that evidence and to take the position, if he wishes, that the original value should stand, and Mr. Neufeld should have the right to ask for a different value, having validly appealed the original assessment. That would be my practical suggestion for the board dealing with this matter.
So is this an appeal by Mr. Neufeld then?
It is.
Okay, thank you.
Okay, I'm going to get a little technical here, dealing with authority and jurisdiction. What you're basically asking us to declare that the supplemental is improper and to strike it out. By what authority can we do that?
Yeah.
Well, I think that it's a good question that you raise, but I think what my my suggestion to you there is that because there's no statutory authority for the assessor to increase the value beyond the original assessed value, the supplemental is what it is. But the board, or I would say to you that the practical way of dealing with this would be for the board not to give any weight to the incremental value that the assessor has put forward, because it's clearly improper, and deal with it, the base value, and ask yourself whether it should be lowered from there. You do raise a good point, Mr. Chairperson, in terms of the board's jurisdiction and authority, and I don't know that I have a good answer for you other than to say that what the assessment department has done is plainly not contemplated by the Act. I do know that when agents or assessors file appeals outside of the legislated authority under the Municipal Assessment Act, for example, an assessment appeal is late, it will be rejected because it's clearly not contemplated under the Act. So the board does have a history, at least the staff, of not accepting non-compliant documents. This is a non-compliant document. It's here, it's been filed, it's before you, there's nothing we can do about that. But I think that the board it really has to give effect to the intent of the legislation, and that is not to consider invalid increases to value. I think that's the best I can do for you, Mr. Chairman, but it is a good question.
Yeah, because I mean, Section 42(1) very clearly says we can deal with the amount, but nothing would give us authority to reject an assessment in its entirety.
That's correct. So when you're dealing with, I do think there's some flexibility though when looking at the amount. If the amount is not authorized by statute in terms of the incremental amount, certainly I would suggest that you have the authority to consider that as part of your deliberations.
Okay. I guess a corollary to that would not the proper means of proceeding would be to apply to the courts to have the supplemental rejected?
That's one option, Mr. Chairperson, but to be perfectly candid, the cost and time of doing that are certainly prohibitive in this instance. And I don't think that the taxpayer here should be left without a remedy. And I think it would be frankly an abusive process for the assessor to be entitled to ask for another, whatever the incremental amount is, $300 and some odd thousand of assessed value, to have that to consider it when plainly it's not contemplated under the Act. Could we go to court? Yes, theoretically we could. I don't know that it's necessary. And I don't think the taxpayer should have to be put to that trouble and expense.
Okay. Do we have any evidence of what the original value was?
I believe it was 600. Well, the original value is what shows up on the notice of change in assessment or the assessor advice. I believe you have that document.
Yeah, it was 678.
678. Assessor. I gotta find that document again. I got so many documents
Mhm.
open. Oh yeah, there it is. But we have no indication of how that 678 was arrived at.
Unless it
Okay,
was, yeah. So, Mr. Chairman, I have to, I was here on a very, very narrow issue, and I have another matter at 10:30, but that concludes my role in this proceeding. Unless the board has any other questions of me, which I'd be happy to answer, but unfortunately, I do need to leave the meeting at 10:30. Mr. Neufeld would handle all other matters from
okay.
here.
Then we will go to, I guess, Mr. Kupfer's presentation on the preliminary matter that you're objecting
Sorry,
to.
what we hadn't quite, that was Mr. Mercury's contribution to the preliminary matter. I only had one, and I don't know if it's in form of summary or not, but the issue is from a valuation perspective, what the assessment department has done in their evidence as um, uh, called this a parcel use. That's on page 1. And the parcel use is now vehicle service garage. The former parcel use, as listed in the other evidence, was warehouse. The act does not specify the city has the right to tax a usage. They have the right to tax the real estate. So there are thousands of times when a building that is built for one purpose is in use for another purpose because they're somewhat flexible in that regard. And if someone wanted to raise chickens in my office, well, you could probably raise chickens in the office. That doesn't mean it changes the assessment. And the building itself, from the evidence that you were shown, is just a square rectangular warehouse building. Period. There's nothing special in it. Now, there is some equipment in there, which of course is business equipment and non-taxable. There's a paint booth, which you even saw from the permits. They change it. They take out the old one and put in a new one. It's not taxable. There are lifts which are not mounted, are not into the floor. They're not hydraulic. They're not recessed. All lifts today are just bolted to the surface and they can be moved. That's it. What differentiates it from a garage to a warehouse? Absolutely nothing. It's a user. So the city assessor is taxing a business, not as the act intends the real estate. And that's an appraisal viewpoint, a very strong appraisal viewpoint. We call it use value. Sorry, that was it for me.
Okay. Mr. Kupfer, then your reply on the preliminary matter then raised.
Well, I'm not sure I have much to contribute, Mr. Chairman. I think you stated it pretty plainly here. Nobody has the authority to simply cancel or annul a supplemental assessment notice once it's been issued. The forms that I reviewed said that this is an appeal for the assessed value, and the assessed value under appeal is $991,000. So that's what I'm here to discuss.
Okay. Any questions on that, Mr. Neufeld?
No.
Okay, Mr. Mercury, any questions on that?
No questions, Mr. Chair.
Okay, Ms. Knight, any questions on that?
No, sir.
Ms. Stevens?
No questions.
Okay, I guess we should, the board needs to take a recess to consider
Mhm.
this matter, whether we proceed or how we proceed on value. I think we will have to deal with value one way or another, but we will decide on how we proceed with value, then come back into session.
Be right back.
Thank you, Mr. Chairman. I am going to depart the meeting unless you need anything else from me. But my role in this proceeding is finished, and if I may, thank you.
Okay, thank you. All right, welcome back. You can tell from the duration we were in recess that we had a thorough discussion on the preliminary issue. We are governed by Section 42 of the Sub 1 of the Act, which gives us our authority. under this subsection B, we can deal with the amount of an assessed value, but it is our opinion that we have no authority to reject an assessment in its entirety. So given that, then we will proceed with value, and I believe we've heard from the assessor on value. So it's Mr. Neufeld on value.
Okay, thank you. I got enough time to sort myself out here too. Thank you. We're going to start with the evidence mark number 1, and we will refer to the late evidence in terms of the rental rates in there. So in evidence number 1 that's listed, the value is on page 1 as stated, but prior to starting in with this, I just wanted to give you a narrative of the property itself, because I heard a lot of things today that were incorrect. So primarily to set the record straight with assumptions that weren't correct, but also to give you an idea of what we're dealing with today. It won't take long. I think the first time I represented this property was in 2005, and the owner was John Carey, and he operated Focus Hyundai and the body shop. And I worked for him steadily during the next decade and a half. In 2015, he told me that he was putting it up for sale, and he wanted to sell the business and the real estate. And in 2016, a deal was struck with Pinnacle Auto Body. Pinnacle is essentially it's Doug and Bruce Danilchuk along with Brian Lowe's, and the Danilchuk family, of course, own Peterbilt trucks, and they did own the Lone Star Harley dealership. They have another dealership in Winnipeg. They've got one now in Ontario and Southern Ontario. They've got one in Kenora and one in Altona, of all places. And so they're Winnipeg based, and they looked at this as a good acquisition with their group. The part of the transaction was that and this is not hearsay, is that Hyundai was displeased with the size of the 1066 Nairn dealership, because it was only, I believe, 16,000 square feet in total, and they did not care for the location. So what the purchasers did, they purchased the business and then struck a 3-year termination lease. Now, a termination lease is exactly what it means. It's you're going to rent it for 3 years and then you're leaving. And a termination lease is not a market value indicator. It's a business deal, and they went to seek new sites, and the idea was that, and they also struck a termination lease with the body shop. Their goal was to get a new site on Regent that had room for the body shop, the dealership. They put a conditional deal on one, and the city development system bogged it down. They could not meet their deadline. They ended up with a site on La Chaudière, 1555 La Chaudière, but it was too small for the body shop. Their termination lease expired in 2019. At that point in time, they took a 1-year extension due to their delay and ended up moving to the new place just as COVID came. Now, of an interesting note to our previous discussion is 1066 Nairn, which is the Focus Hyundai dealership. At that point in time was an auto dealer, and after it was vacated, it became a warehouse for the provincial government for the storage of COVID-related protection material. So that just goes back to what we were saying before about the concept of someone slapping a use code on a building and say that determines the value. It doesn't. The rent he got from the government was virtually the same as he got from the dealership. And so while this transition was happening, they were looking for another site to move the body shop closer. And in the end, they came to the decision that they would exercise their buyout rights. And there was a 2024 transaction and on our subject property today. So all of these related to decisions made in 2016 and had to do with the acquisition of two businesses, relocation of them, and non-market based, non-real estate market motivations. And none of these would ever, by any reasonable appraiser, assessor, ever be considered market-based transactions. They're having to do with a business transaction and multiple properties. So we're not going to care about anything that was done. Now, the lease information that the assessor, I questioned him about, and I'm rereading his work, he did misstate. He said what he said was different than what the actual case was. So Focus Hyundai was the owner at the time that this income and expense form was submitted, and it was not, of course, the person's named by him. It was the limited company that's at the top of the header, and that's on his page. Sorry, I was just looking for it. I saw what he was referring to, a limited company that starts with the number 4.
Mm-hmm.
And sorry, 4487061. That was a limited company controlled by Mr. John Carey, and I believe those are his family members. They were leasing it to Pinnacle on a termination lease. Yeah, the current owner, since you're looking at your appeal information, is not Mr. Carey any longer. It is the Pinnacle Group. And sorry, I just misplaced what I was looking at here. Yes, I was looking at the assessor's page 9 when I was making that reference in terms of who's the owner. But page 1 is clearly Pinnacle, the Pinnacle Group. This is just clarification. While this transaction was happening, I was talking to John Carey. John didn't want to actually file anything because he was contemplating a sale, and there was a miscommunication on their end, so we never got to file the actual 2025 appeal. And then we did file for 26, which is the one that was scheduled. And while after we had filed, we had a notification from Karine that there was a supplemental coming out. And I think I communicated first with Marcia Mazarecki about 4 or 5 times, and then later with Nancy. But they had changed the supervisor. And so I would say we probably had about 8, 9 communications on this matter. And what Mr. Mercury pointed out to you earlier was correct. And we're not going to rehash the same argument, but again, there were some errors in what has been transmitted to you, and that's all I wanted to straighten out. The value we were looking at is sorry, and now I have to open the one I was referring to, is shown on our page 1, which is a value of $8 a square foot. And that, if you view the assessor's workup, their workup prior to this was $761. So there was no major disagreement in the value of the property based on their past history of appeals, their documentation on it, their site visitations. I've had assessors to the site. I think I've had 3 to the site on inspections over this period of time. There's no mysteries there. Now the pictures which are in page what I marked as evidence 2 and as your exhibit 2, these are a mix of pictures, and I was deliberately not dating them because they're irrelevant. They're the same. I've been in there, I don't know, 5, 6 times, and I'm taking pictures. So some of these are new, some of these are old. the consistency is that now you can look at the model of the car, you can guess what year it was, but the point is that there have been no physical changes on the site whatsoever. It is built in warehouse style, and if the body shop left, the use could be a body shop, it could be a warehouse, it could be a retail warehouse. It's a building, and it's not great location. It's Stapleton. It's off Nairn, so that means there is no hope for getting drive-by traffic as a impulse retail site. It has to be a destination site where you knew you were going there in the first place. So that's why it's relegated to the class of a warehouse with multiple uses available. And this happens numerous times in real estate, and we just chase the building, the real estate, not the user on it, unless you're doing a leased fee or a use value, which by law we don't do. We use a market value of the real estate only. So the support information for the rents we used is in the late evidence, and I'm going to try to stay in a bit of order so we don't bounce back and forth. So right now I'm still on number 1, and it has page 2 are pictures, and the bottom one is a picture that's a Google Street View. I think that one was from 2022. It's the same then as it is today. There's no change. That cell tower in the background is not on their property. The compound is graveled, which if you follow the proper building code today, not building code, planning bylaw, is a legal non-conforming use. In other words, if this were changed and a new use came in and someone wanted a new permit for use, they would have to pave it, because the city does not allow gravel to transition onto roads, because the gravel ruins the road surface when it's tracked onto it. So this just, again, goes back to the concept of the city says it changed use. Well, they didn't take out an occupancy permit for it. It's always been in the same one. And this is physical proof that they get to enjoy their legal non-conforming use, which dates back, I suppose, from the date it was built in 1974, before the current zoning bylaw. The permits are listed on page 4, and you can see that they're very, very minor. There's been no changes. Just to point out that LED light replacement is in there, which nothing, and everybody has a backflow prevention. So you'll see those in every single time you pull building permits. And the only change that they have done over the time period is they had to replace the back door, but that's just normal wear and tear. In terms of zoning, this is in M2 land, and we have the zoning table on pages going forward of, I believe it starts on page 11, and right now there have been changes in the zoning, so auto-related uses have now been given a bit broader permissibility, and I'm having a hard time reading, so I'm not stalling on purpose. Page 13 are the automotive related uses, and in the last,
I'm if I can, are we talking about your most recent
evidence one? Evidence
1. Oh, okay.
Yeah,
I was on evidence 7 or whatever it was.
Oh, okay.
I thought you were referring to that.
Well, I was
Okay.
gonna stay with 1
Okay.
because there's the only thing that the late one, which you're calling 7, really changed was the comparables that were adjusted for it.
Okay.
But it's page 13 of number 1 is the principal use table, and my comment on this is that this was a change from an adjustment that was done in this in the city planning, because previously automotive uses were restricted to C3, and now they're permitted in all the way from C2 and all the M's, but you'll notice there's an asterisk beside them, and there's usage restrictions. Now, what happened in the past was that auto body were stuck in an M2 category because the paint booths emitted fumes. And with the new downdraft techniques, there are no more fumes emitted. Plus, the composition of paint has changed over the time, so it's not as toxic as it once has been. So that there's been easier to get your zoning approval. But when this was built, they needed it to be an M2 zoning in 1974 because it was an auto body shop, and that's what this is history as it relates to where these body shops got placed and the whole concept of changing a use code. Well, when it was built, it had to be in an industrial use. That's the way the city classified it. Now, the city reclassified the auto bodies because of an improvement in their techniques for dispersal of paint fumes and amongst other things. But and again, this is just to give you some background information as well. Now I'm just moving along to page much further ahead, page 53. So this is a document that is obtained from the city of Winnipeg, and the heading is closed landfill sites. It's available to the public, and interesting point, page 54, landfills did not need to be registered until 1976. So when they built the site in 1974, the landfill was not registered. Now, all of these little graphs here represent former landfills in the city of Winnipeg, and they all have a number to them. And on page 55 is a map of where all these landfills are located. Obviously, the big one in the south is Brady Road, but if you'll notice the rectangular one on Nairn Avenue, that is the subject's location. So this land between Nairn and I think it's the rail line was a former landfill site in two areas. The oldest one related to the removal of clay for making bricks at Alsip, and then backfilled with a lot of organic fill producing methane. And then there was a second landfill beside it. And so this is the city's information of what they do. And here's the important part, they're monitored. And it also means that they're registered. And there's page 56 is the landfill gas monitoring, which is required. Now, what this matters for a property like the subject is the impact on value isn't just maybe it could be contaminated. It is. It's registered. You're stuck with it. What that means is that every single time you do a transaction, whether you sell it, you borrow money against it, there'll be somebody coming along saying, I need a phase two. A phase two means drilling. It means anywhere from $20,000 to $80,000 in costs. And then on an ongoing basis, you pay for the costs of monitoring. The city doesn't monitor it. They monitor their own land. Private individuals have to monitor their respective places. And it's an impact on value because it's a known issue. Now, when you have a methane building and a building that's on a methane producing area, and there are several between Nairn and I'm just trying to remember the back street name here is it'll come to me, is that there's a fair amount of excavation required, and then there are membranes put down, and then there are venting ducts that bring the potential methane out the side, and then there's ongoing monitoring. It's not a good investment. People don't like it. Generally, like lenders don't like it, which means you don't get to borrow as much money, you don't get the high ratio loans, so you get a shorter amortization periods and higher rates. What that means is it's a cap rate issue. Cap rate is all based on the amount of money you can earn and whose money it is. So if you get the bank's money and you pay 5% for it and you want a 10% return, your cap rate can be 8%. But if if you're getting less money from the bank and you need more outside money, you have to have a higher cap rate, because that's it's all about following the money. There's no mystery in this. I'm not telling you a theory that was artificial. This is the reality of life with a property that has an environmental issue. That's the impact on it. Now, on page 58 is this is the designation. This is site 27 and 26, and there are the dates. You'll notice that 26, that was the brick removal. That was 1912, closed in 48, and then reopened the site next door in 1950 and to 1960. They're marked with the pin marks there, and then there's a blow up of the map, and page 59 explains this is the specific 26 and 27, which is where the subject is located. That is in place. And on page 61 is a map, and it's really hard to see where the subject is on that map. And so I blew that up on page 62. That's the city, that's the subject property. Half of it is in the zone. The other half is in what's called a protection zone, which means you still have to follow the same standards, but it's not, they got in a different category in the environmental registration. But all of their land, of course, is virtually within the pink area, the contaminated area. Now, what this means is, in real estate, what this means is that the prospects for alternate use are somewhat limited. If you have an alternate use that doesn't have a high degree of human habitation or human visitation, these sorts of issues are less of an impact on the potential use. They still impact the cap rate because it impacts your money lending policies, but in terms of being able to use them, it basically pushes this usage into an industrial category, and a body shop is an industrial use. That's why on page 1, what we did is we looked at the cap rates, and now the 7% that we applied as a startup is from the Collier's industrial cap rate summary. Now, nobody tracks body shops. Nobody tracks small little industrial sites. The major companies, the 3, 4, sometimes major companies in real estate, track investment grade sites. Investment grade sites get the best bank lending rates, which means their cap rates are lower. And in the report for the time period, the number was between 6.5% and 7.5% for prime industrial. We use a starting point of 7% for all industrial, and then look at the deficiencies. And as you can see, the major deficiency, number 1, the property rights, landfill registration, is the major issue. And then it's an older building. The quality you see from the pictures, it's not wonderful. You're not going to put a food processing operation in there without some major renovations. And the design and layout, essentially, it's rather small, and it's even too small for an auto body shop. And I'll get to that in number 2 and show you and point that out. And it's might be of interest to somebody who has a small operation, but remember, the cap rate is not an artificial construct. It's not something that people can glibly throw and apply to a property simply because they think it should fit. It must match the expected rate of return from the lease, period. And the better the property, the bigger it is, you usually get a better rate. The ability for it to be more flexible, you'll get a better rate. And these small little ones, they're not sold on the basis of their income. And if you're using the income approach, you cannot put an artificial cap rate on it. And that's what the model has done. And all the time, they have these small ones, and the model says, well, we've analyzed the rents and the sales, and this is the cap rate. No, that forgets the major issue of real estate and appraisal. They were not sold for their income producing capability. So you can't manufacture a cap rate. if you're going to do the income approach, you got to follow the rules. So then going along to, I'm not going to spend too much time on the whole concept of the rental rates, because you'll note that based on its former use, we are somewhat in disagreement. Somewhat in agreement with the city assessor on those rates. And yes, I'm sorry. I'm just going ahead to number 7, and we had a number of rents in there that are just lower quality garage rates, as well as industrial rates, because this is, I know we've been over this ground before on the auto body shops, but the reasonable approach to it is, what could this building be used for, not what is it being used for, because that's how you determine market value. You're not chasing use value by going after a body shop. It got put there in 1974 because that was the only place for it. And now today, you're going to relook at the market and say, what sort of rent are you going to get? And it's not just my opinion, it's just a proper appraisal theory that you're going to look at industrial rates as well as some automotive rates that are inferior. And we have a number of them listed, and this is on page 3 and 4 of the 3, 4, and going to page 6 of evidence number 7. Again, if the question is which is the most comparable, well, a lot of it, it's a good question, but the point is that we didn't disagree with the assessment department before this. When the first assessment came out, we disagreed with them on the cap rate, mostly because of the landfill area, and that's our greatest concern. The 761 or the $8 we applied, I see no perceivable difference in them. They have a different method of taking fewer expenses off. We take more expenses off. In the long run, our NOI and the city's NOI should be within a few dollars of each other. That's based on the old assessment. It was all the cap rate. The pictures, and this is number 2. Most of these were fairly recent. I went down when I heard about the SUP, and I took several of these pictures, and then I put them in, and I really don't know the truth which ones are the old ones and which ones are the new ones. I do know that the top of the second page is a new one, because I was looking at the vehicles, and they're mostly Hyundais, but the age of them, and you can see the problem with the obsolescence in this, why they need a bigger space. Today's body shops, the prototype is a minimum of 20,000 feet, and most we're seeing now expansions to 30,000 square feet. The Chipmans at Point West was one of the first to go that large, and they were ahead of their time. But now all the new ones coming out are because you got to get bigger or you get out of the business, because MPI have their standards, and you meet their standards, and it's a business. And this is another problem with the body shop, because it is a government regulated business. Their fees are established by MPI. The scope of the repair work is determined by MPI. The accreditation of their facilities and their people is done by MPI. The best way is to go large on this, and because of the process now that's involved. The last time I brought my car to the body shop, they said, you got to make an appointment for inspection, and then we need it for half a day, and then we'll call you when the parts are in. That's the new process. There's no more drop my car off and go fix it, and they go to the junkyard and find some parts and replace it. The world has changed for them, and it's go big or get out. This is too small, and this is why the owner was seeking larger quarters, which they could not obtain. This will likely be a short-term issue because their size of their dealership. It's a business issue. The larger the dealership, the more cars you sell, the more business you're going to do in your service garage, more business you're going to do in your body shop. It's funny, you know, I was home when you called this morning. On the way in, I drove past like 5 accidents. So business is going to be brisk for MPI. Page the third page, this picture is the top of it is the same one that I took 15 years ago. This is under the stairwell. This is so this might be an old one. Nothing has changed. It is what it is. There's a small upstairs area, and that is on page the bottom of page 2. Sorry, page 1. That's on top of the office, which is at the top of page 1. In order to squeeze these in, these both have 7-foot ceilings. So today's building code is not permissible. You've got to have buildings to code for height and everything else. That's another legal non-conforming use. So not really worth looking at in terms of finding that there's extra value in order to obtain that value. You have a legal non-conforming use. On page 4 this is the new downdraft paint booth. That's a replacement. I was saying earlier, this is just a piece of equipment. The old one rolled out, the new one rolled in. The bottom of page 4, I know this is a current picture because that's my thumb on my camera. And you can see the pointing on the brick and the darkening of the edging. They're certainly not the top quality operation. Next pictures on page 5, same fingerprint, same age on these. These are current pictures. In the back, they've got some containers that have part storage because they don't have room on the inside. Typically, a body shop is going to have some parts storage in there, especially if you repair a lot of Hyundais. You're going to want a lot of Hyundai paneling in there. They do not have the room. Page 5, I mentioned about the lifts, and these are the new, they're called electro-pneumatic. So it's an electric motor that powers a pneumatic pump that will drive the lift up. They're placed on the ground, they're bolted in place, and no more of the old-fashioned one where there's an actual piston that goes into the ground and a hydraulic pump underneath, not attached to the ground. Pull them out and start storing potatoes in there. And that the legislation that was mentioned there already. So that was, let me just, I think that's the extent of what I had to present for the valuation side. And well, in number 3, which I had referred you to earlier, these are the only ones that were in my electronic files because we transferred to electronic around this time, and the rest are in the paper files. And I couldn't gather them all. And this one was when Ryan Valderrama had come out. We dealt with the 2018 appeal, and nothing has changed. That's the point. There's been no physical change. It could be a warehouse. It could be an auto body shop. It could be a lot of things because we're just talking about the building, and you can see the pictures are all the same. And at that point, it was deemed to be owner occupied for that particular period because that was right before Pinnacle bought into it. You can see that on page 10, which was dated the end of 2015, it was still deemed owner occupied, and until Pinnacle came and bought the business. And there's some older ones in there too. I'm just trying to remember from memory who I took in there. I did not take Marcy in there, and that's on the 17th page, although she did look at it back then. And she's now the supervisor for industrial. But this is her report. And then so that's I think the extent of the presentation. Thank you.
All right, Mr. Kupfer, questions?
Thank you, Mr. Chairman. I have a few. I guess beginning with what you finished off with there, Mr. Neufeld, about inspections of the property. I think I heard you state something like the property's been appealed for 20 years now, and every 2 years you've inspected it with someone. I have zero notes from any.
I did not say every year I inspected it with someone. I said every year I inspected it, and every year we appealed it. I did not always get an assessor to come out with me.
Can you point to a single date at any time when you had an assessor come out with you for any of these inspections?
I would have to consult my paper file, and I have to tell you the truth. I am unable to read at this point in time. I'm doing a lot of this from memory. I have an issue, and I can get those answers for you. I wasn't prepared for your questioning, but if you give me 20 minutes, I can dig the file out and get someone to read it for me.
Okay.
But from memory, I know I've had, I think 3 assessors out. Larry Bartholet, going back years when he was still with the department, was the first I had out. Ryan went out. I met him there. And I there was another one in the meantime, and I just can't remember when.
Okay. You've submitted a rent, $8 a foot, and provided some comparables beginning on your page 3. As you've stated, this is a fully Autopac accredited and MPI direct repair facility. Are any of your comparables in the same boat?
I will have to look at those, and it's going to take me a bit of time here. Virtually, I believe that all body shops that are now in operation are MPI accredited. They don't allow any more independence. That's the first answer to the question. Now I'm just, okay. On page five of exhibit number 7, starting at the top, we have a Boyd, and that is accredited. Number 5, Southside Auto, that is accredited. I'm just looking for the body shops here. Second, I got to blow this up a bit more. Number 19 had an accreditation in the past. That's on page 5. They were doing mixed work in there, but
that's the one marked auto sales for 22,877 square feet.
That's prior to this lease. It was Birchwood, and Birchwood had a body shop in there, and subsequent to that, they changed the usage on it, And this is a sublet from actually Pinnacle sublet this to Birchwood at 750, and that was accredited for MPI prior to this time period.
That comparable you mentioned shows a start date of 2015 and a 5-year term. In fact, quite a few of these comparables on your page 5 appear to be outdated, as in the term of the lease would have ended well before the reference date.
Well, there are some that start dates were before then. Of course, they're all before then. And as far as the term goes, yes, that is the case with some of these.
Your comparable number 12, for example, 75 Stadcona. Pardon me, that one stands out because it's on my list as well. You show a 2015 start date, 5-year term at 970. But in fact, they have a newer lease than that, as shown in my brief, beginning in 2020. I guess the question is, why not include the current and relevant rental information in your comparables?
When I researched that particular rent, I found that there were non-realty issues in it and related parties, and the old one was clean, the new one isn't.
Okay, is any of that included in your brief?
No, because why would I include something I'm not putting in, I'm not using? I only put in rents that can stand the test of the proper tests, not ones that I'm guessing at. Maybe they belong, maybe they don't. We research our stuff here.
I'm sure. You mentioned through your permit search on page 7 a paint booth being installed. I believe the permit shows 2016. Is that something you would commonly find in a warehouse?
First of all, the concept of the permit is based on the bylaw. And you've got to take out a permit for virtually anything this day. It is not permanently mounted. And yes, you see it everywhere. One of my clients is 2525 Inkster. They had a paint booth for their fire trucks, and take it out when the fire trucks left. They take it out. That was my point. It is not a permanent fixture, but the permit department requires a permit because you're touching the mechanical systems, and that's the bylaw.
Okay. You spoke to a landfill issue, I believe, at the end of your brief, and used that as justification for your cap rate of 8.75%. Is that correct?
I used it for some of the adjustments made to a cap rate from Prime.
Okay. Do you show any of those adjustments? Do you include any analysis showing how this type of effect would increase the cap rate, or any way to measure it at all?
Yes, there is a way to measure it, and I have presented that in the past. And essentially, it's an entire course load for us. There's one of our textbooks deals with it quite in depth, but it's a 3-step process to consider detrimental effects on properties, and the first, of course, is the identification of it, and then is the remediation of it, and then is the ongoing impact of it. So all of these get split into a category. Now, it's been identified, it has not been remediated, and then so what we're focusing on is the long-term impact. And I described the issues that a property has to go through. So essentially, you're looking at higher building costs when you do build on it, and you're looking at an ongoing cost to your property of monitoring and of doing phase 2s whenever there's a change required. And there are regulatory agencies that if you want to borrow money, do a phase 2. You want to do a sale to somebody, they'll want a phase 2 on it. A phase 2 is a invasive testing. So what they will do is they will do test holes, there's a map of this particular area that show every single test hole drilled, and there are hundreds, maybe as many as 1,000, because it's an ongoing process. And if you look hard for it when you drive through it, you can see the vent holes everywhere. But essentially, the simplest way to explain it is that a 70% ratio loan becomes a 50% ratio loan. A 20 to 25 year amortization schedule becomes a 15 to 20 year amortization schedule. And the interest rate will go up between a half a point to a point and a half, because it's deemed to be a risky process. Now, when you take all of these things into consideration on the monetary side, it usually works out to a 2-point higher cap rate than one that is not impacted, because that's the simplification of it. And there's probably dozens of municipal board orders that I haven't put in there that have all done the same thing. There's actually one at Fort Chester, a municipal board order, when Chester's a few blocks away in the same district. The board applied a 2% higher cap rate on that basis.
I will caution Mr. Neufeld, board orders aren't included in the presentation. We can put no weight on.
And I respect that point, but I was there and I presented the information. So it's not a question of what the board did. It's a question of what I did. And the board just happened to agree with me that particular time. But in the past, it's often been called stigma related impact, and it's quite knowledgeable in the industry. My only point with this concept of an automatic 2% is that it should be float with the interest rate or the cap rate of the time. So if you're at 12% and they award 14%, that's okay. But if you're at 7%, it might only be 8.5%, 8.25% based on solely the stigma issue, because it's a reflection of the return on investment. A lengthier discussion of it has been done in the past. I did not do it for this time. Regardless, if this goes further, we'll do the workup for you. But I have full confidence in the number.
Sorry, just to reiterate, the question was, is any of this analysis included in the brief for us to actually review?
No.
Okay. I touched on the land to building ratio. There's roughly 5.5 times more land than building here. Would you agree with me that that is not typical of a warehouse property?
No. A warehouse property is based on the ability to get, the land is based on the ability to get maneuvered trailers in and around the area. This, as you can note by the trailers in the rear, has that capability. So the problem with it is it's small. So it has a higher building ratio because you need the room to maneuver the semi-trailers in. That in itself is evidence that this is deemed in the marketplace, an industrial user would find it of interest, that they can see the trailers and say, oh, I can get my truck in there.
Okay, and last question, you spoke to the location a bit here about it being not prime. We're just off Nairn, so they're not getting the exposure onto Nairn there. But are you aware there are 2 other vehicle service garages right across the street from this property? Number 19 and number 15 Stapleton are also vehicle service related and are both assessed as vehicle service related, similar to the subject property.
What relevance is this?
This is in relevance to the question of the area, as you described it as being undesirable, I think you said.
What I said is that when you're looking at a building and you're thinking about alternate use, you view the entire range of potential alternate uses. What I said is it's not going to be an impulse-based decision that rules out retail. You have to be destination oriented. And that's what I said. And, opening a garage across the street, well, if you had some rents or on those that you could present, we should probably look at them. But your whole question does not align with what I said.
Okay, we'll agree to disagree then. Mr. Chairman, those are my questions. Thank you.
Okay, Ms. Knight, any questions?
I just have one question on your page 13
Which
of
one?
the last page of page 13 of the last, whatever it is, the last thing that you gave us,
Okay.
where it's talking about the landfill sites.
Okay. The landfill one. Yeah. Okay.
Yeah.
Uh,
So just to be sure, where it says Princess Auto, the first street past Princess Auto there, the first line coming down, that's Stapleton, correct?
boy.
So you see Talbot, or not, Narren is Route 37. So
Okay.
there's Panet Road, and then the next street
I'm
coming off.
not, sorry, I'm not sure what you're looking at here.
So on your map, where
okay,
it says East Elmwood Crossing, Princess Auto, Real Canadian Superstore.
okay, hang on. I'm looking at the wrong one, obviously.
Page 13
Page 13.
Of which?
second brief.
Of the late brief, yeah.
Of the
Late
last
brief.
brief.
Thank you. Okay.
The other one is on page 50 something. That's why I was like,
Okay, hang on one second. I am not great.
so you can see Talbot Avenue, correct?
Let me just find page 13. Oh, okay. So this is, oh, that's what happened to it. Okay. Okay, got it.
So the first once you come off Panet Road and you're going down Talbot towards Archibald, the first left is Stapleton, correct?
I have to look at a map on that.
Yeah, I'm just trying to figure out how far, like
I don't
that.
think it is the first one. I know what I know what you're saying. Let me just, I want to just look at a different map on there. That's the one where they have the blue contaminated area, which is placed on the properties.
Below map, correct. But I'm
Yeah.
talking about the red dot.
The
on
red,
the
oh,
other-
the red dot. Okay.
Okay, so you're looking at Route 37 coming up to Panet Road from the right to the left. Of the
Yes,
page.
yes, I see that. Okay.
Then the first street that comes off of Route 37 to the left is Stapleton, correct?
The first one, you'll have to excuse me, but I don't go to this area that often. Only,
Well, if you're looking on the map, the first thing that crosses Route 37 is that I don't know what that is, but then there's Panet Road. So it's
okay,
Lagimodiere, Panet Road, and then the first left after
Okay.
Panet Road is Stapleton, correct?
so from Panet going east on Nairn. Is that what
Panet
you're saying?
Going east, going west,
You're going
Oh,
west.
sorry,
going
you're right.
west.
West,
going
yes,
to the left.
I have a different map. And so they're at the corner
If
then,
you look on page 13 of your second presentation,
yes, I see what you're saying. So yeah, Panet Road, and then there's a shopping center.
okay, but we're not going that way, we're going the other way. So Princess Auto is on
Yeah.
Panet Road. Then
Correct.
if you go a little bit to the left of that, that is Stapleton, correct?
No, that's the little bit to the left of that is that road is still, well, is there's a large shopping center. I forgot the name of it. And then the first legal street after that is Stapleton.
Stapleton,
Yeah,
correct.
but I
So
can give you,
The shopping center is between Princess Auto and that first street.
correct.
Then
That's it.
the
Yeah.
next street is Keenly Side. And that T that you've got in there is on the other side of Keenly Side. So that's far away from this place, correct?
The red dot is, yes.
Yes. So
But the
that's the
red-
landfill site was the red dot, correct?
No. That red dot is a center of the designated landfill site.
Oh, okay, because I was trying
Yeah.
to figure out how this landfill site affected Stapleton
Well,
when
and
it's
that's
not
that.
there.
That so on page of the same document, on page 16.
Okay, just a minute. Yeah,
So that pink area is the entire landfill site.
okay, I got it now.
Now, and you can see on there that the shopping center is white, and of course Princess Auto is in the white, and there's a jut out, and right
So
where
Stapleton is that first block.
yeah. So
Yeah,
then
okay.
the blow up
Okay.
of it is on page
It's okay. I've got
17.
it now. I'm good now. Thank you.
Yeah, no, okay. No,
I
no,
couldn't figure out how one was affecting the other, and now I see it's the whole thing. Okay, I got it now.
Okay, any other questions, Ms.
No, thank you.
Ms. Stevens?
I think I'm good. Thank you. No questions.
Okay, I have no questions. So would either side like a summation, Mr. Kupfer,
None for me. No, thank you.
Mr. Neufeld?
Other than what's already been stated, yes, just briefly, on the assessor's evidence for his rent, he put 761 a square foot. Then he told us that this was a mistake. And the point is, there's no correction to this mistake. This is the evidence they presented. And to call an audible at the hearing is just as bad, even worse than what changing the assessment because a sale happened. That was the evidence they brought you, and you have to rule on the evidence. 761 a foot, we can live with that. Then that leaves us with the capitalization rate and the impact of all of the issues. And you know, the environmental issue. The reason that it's so strong is because there are possible problems and then there are probable problems. This is probable. Environmental is probable. There's a registration. Potential, you say it's old, it could fall apart. Well, maybe it will, maybe it won't. But we know the environmental is registered. There are known impacts on it. There are known costs and there are known obstacles in working with the land. That's why it's such a major factor in cases like this. And I'm sorry, I'm just trying to read my notes here. No, I think we've said the rest of it throughout the hearing, but it was just that last point that I wanted to bring forward.
Okay.
Sorry for my late start, and I have a very good reason, and that I'm certainly not going to share publicly, but I meant no disrespect by it to the board.
Okay, thank you very much. We've now heard all the items on today's agenda, and this hearing is now adjourned. Thank you, gentlemen, for your presentations.
Thank you all. Have a good day.
Thank you, and have a Merry Christmas, everybody.
Yes, you too. Bye.